Good news today. The economy boomed in the last quarter. It jumped 4.1%. President Trump held himself a little press conference to celebrate all of this. According to CNBC, gross domestic products grew at a solid 4.1% pace in the second quarter. That's the best pace since 2014. There was a quarter in 2014 under President Obama in which the GDP jumped 5.2%, I believe. But this has boosted hopes that the economy is ready to break out of its decade-long slumber. If the next quarter is as good as this quarter, then we are looking at the possibility of 3% GDP annualized growth. So when they say that it grew 4.1% in quarter two, what they really mean is that if you took that growth and you extended it over the course of the entire year, then the economy grew 4%. It doesn't mean that the entire economy grew 4% in that particular quarter. But with that said, if the economy continues to boom, it'll obviously be a boon to all of these Republican candidates in their congressional districts, and it'll be a boon to the president of the United States in his reelection efforts. This is the fastest rate of growth since the 4.9% in the third quarter of 2014, which was revised downward, I believe, from 5.2. It was the third best growth rate since the Great Recession. In addition to the strong second quarter, the Commerce Department revised its first quarter reading up from 2% to 2.2%. President Trump says that we are on track to hit the highest annual growth rate in over 13 years. He says, I will say this right now, and I will say it strongly. As the deals come in one by one, we're going to go a lot higher than these numbers, and these are great numbers. Now, these are really good numbers, and I'm really, really pleased because, listen, when the economy booms, we all do better. That is a wonderful thing. It is bad salesmanship to come out and say that we're going to do a lot better than these numbers because why would you oversell the economy? Going out there and overselling it and then coming in short is a recipe for bad headlines. Whereas if you just said, we just had a fantastic quarter and we look forward to continued strong growth in the economy, then you're not providing the sort of downside that your political opponents will jump on if we come in at 3.7% next quarter or 3% or 2%. Now, there are some people today who are suggesting that perhaps these GDP statistics are somewhat inflated by President Trump's tariffs. Why? Not because the economy jumped on the back of the tariffs, but simply because a bunch of foreign companies bought a lot of American product in expectation that tariffs were about to increase in their own country. So, for example, if you're China, now is a good time to buy American soybeans before your own tariffs go into place on all of the American soybeans in retaliation for the Americans raising their own tariffs on Chinese products. So the export numbers were slightly inflated, according to some folks like Ben Smith over at CNBC. We'll have to see if that is indeed the case as time goes on. Residential real estate starts were a little bit slow, but all other areas of the economy continue to boom. All of this is very good for the president of the United States. One company that is not booming, however, is Facebook. Facebook has taken a massive hit. During a conference call on Wednesday, Facebook Chief Financial Officer David Wayner predicted bad news for the second half of the year. The company's shares immediately began a drastic retreat in the extended session. Facebook would see a $100 billion blow to its market cap after shares plunged 20% because the bloodbath was continuing into Thursday's trading session. The decline was stunning not only because of the scale, according to MarketWatch, but because Facebook had managed to avoid this type of punishment through a multitude of sins, too numerous to fully list. While the Cambridge Analytica controversy weighed on the stock, it had easily rebounded from those declines, even during Mark Zuckerberg's head of Facebook, congressional hearings earlier this year. The company's shares rebounded during his testimony. Facebook seems to have become the Teflon company, but when it comes to finance, you actually have to show profit. And one of the things that Facebook has done is they've cut off a lot of avenues to profit by cutting off a lot of their advertisers, particularly on the news side. And then if they can't monetize the data they've been gathering from people because of things like the Cambridge Analytica scandal, it makes it questionable as to how they're actually going to earn for their investors. So Facebook shares took a serious hit. And Mark Zuckerberg, his stock was worth $20 billion less than it was on Tuesday, basically, by the end of Thursday. So that is some pretty stunning stuff. Colin Sebastian, who's an analyst with Robert W. Baird, wrote, clearly Facebook is more focused this year on strengthening content quality and platform security, which likely accounts for part of the deceleration in revenues and user growth. We note that our surveys earlier this year had suggested some Facebook fatigue, which may now be showing up in results. So some of these social media companies, and Facebook has basically a monopoly on social media, some of these social media companies are losing the trust of their customers, and they are seeing that reflected in their stock prices. The same thing, by the way, is true over at Twitter, which has been taking stock hits this week. If you look at their stock price right now, as in today, it has been down significantly today. It's down almost 20% at one point during the day. And over the course of the last 5 days, it has taken a massive hit, starting at the end of the trading day on Thursday. Twitter just plummeted. It went from $43 a share all the way down to about $35 a share. So it took a massive, massive hit over the end of the week. And a lot of that has to do, again, with all sorts of trust issues that have been harming Twitter. And that ranges from the shadow banning scandal that has harmed Twitter to the fact that they've had to purge all of these fake accounts on Twitter. One of the serious questions about Twitter has always been what its profit model is going to be, because you don't pay for Twitter, it's free. And so advertising was supposed to be the profit model for Twitter, but advertisers aren't seeing the kind of revenue that they want to see in return from Twitter. And so the stock has dropped tremendously. The company did post another profit, which for the third consecutive quarter, it was able to do so in the company's history. And the $134 million in net income it reported amounts to 13 cents a share. Twitter's top line did climb, and it beat the fact-set consensus estimate according to MarketWatch. But investors were reacting to Twitter's slowing user growth because its monthly user count went south. It fell by 1 million to 355 million from the year's first quarter. So people are simply not joining Twitter at the same rate. They may be experiencing the limit of the number of people who actually want to be on Twitter, which makes some sense because right now, what you're seeing on Twitter is social media mobbing becoming the most popular form of entertainment on Twitter. Somebody says something and you destroy them. Somebody says something you don't like and you decide to end their career. That means that a lot of prominent people are no longer going to take part in Twitter. They're not going to take part on Facebook. A lot of these social media companies have reaped the whirlwind, and they would have been a lot better off if they just said, listen, we're a platform. What happens on that platform? Not our job to police it other than criminal activity. But instead, the folks over at Twitter have said, we want to make a better user experience with healthier conversation. And then people on the right say, well, yeah, but your definition of healthier conversation is not allowing us to talk. Right? Your definition of a healthy conversation on Twitter is shadow banning us, preventing our tweets from being seen. And the same thing on Facebook, where people say, well, you've discriminated against particular points of view on Facebook. Why would we want to give you our business? These social media companies decided they didn't want the backlash from the left, and instead they drew the backlash from the right. I don't think that fully explains the decline in stock price, but it has something to do with the overall lack of trust people now feel in social media. And the politicization of business is having some major impact across the board, and not just on people on the right, on people on the left as well. The latest example comes courtesy of the Huffington Post. So on Thursday, the Huffington Post revealed an absolute bombshell. Liberal columnist Jonathan Chait of New York Magazine was in an all-hands staff meeting, and he said at this meeting that part of him was glad that President Trump had won the Oval Office. This required the Huffington Post to run a front-page story about how terrible Jonathan Chait is. Jonathan Chait is a hardcore liberal, right? Big government, hates President Trump, doesn't like conservative policy. But according to the Huffington Post's Ashley Feinberg, Chait, among others on the magazine's editorial staff, was asked whether any part of him was happy that President Trump had won, thanks to the possibility of more exciting content. And Chait answered honestly. So according to the Post, listen to the way the Huffington Post reports this. There's a woman named Traister, Rebecca Traister, who's a writer at large there. Traister went first and gave the right answer, which is no, said one employee. I didn't realize that there was a right answer to how do you feel about things. She said there isn't a single molecule of her that is happy Trump won and that we'll all face repercussions for generations. Chait, however, answered the question with an affirmative 100%. According to the staffer, Chait said with a laugh, maybe that makes me a sociopath. Some of the employees in attendance said the group was stunned by Chait's response. Others were less surprised to hear the sentiment come from a self-described disenfranchised white man. This is how the left responds to its own when they say something mildly positive about President Trump. Not even that they love President Trump, want President Trump to remain president, but just he's entertaining. Right? The level of horror in the Huffington Post article is telling, and of course, Jonathan Chait then got dragged on social media, requiring him to respond to the Huffington Post, in which he said that his comments were, quote, intended for an audience which I assume was familiar with my work and the obvious seriousness with which I take politics in general and Trump in particular. I was commenting in an ironic and self-deprecating fashion about the way in which I can professionally disassociate myself from the events I am commenting on. But that didn't stop folks on the left from losing it. Jeet here over at The Atlantic said the disappointing thing here is that Chait, as I thought when I saw the headline, isn't an accelerationist, meaning there are some people on the left who are happy that Trump was elected because they think that it's going to precipitate a vast move to the left, but that's not what Chait was saying. Andy Zeisler, who's another lefty blue check mark, said, LOL, I'm such a sociopath, actual sociopath. And then, of course, you have folks like Oliver Willis at Media Matters, who is a complete dolt, saying, how white male of him. So the left is now eating its own. And then you wonder why so many people don't want to take part in social media. You wonder why it is that so many people are running screaming from companies like Facebook and Twitter and why Facebook and Twitter, in an attempt to stem that tide, have decided to crack down on conversations. It turns out that open fora, I mean, honestly, I sort of feel for the heads of Facebook and Twitter to the extent that open fora are going to lead to a large amount of meanness. But if you crack down